So here are my 4 predictions on what's going to happen with the housing market in the near future due to this little pandemic you might have heard about. So number 1, I think the mortgage criteria is going to change dramatically. As you might have recently heard or read, JP Morgan Chase just recently increased their mortgage criteria to putting at least 20% down and having a credit score of 700 or greater. Now, in my personal opinion, that's a good thing. I feel that mortgage criteria has gotten incredibly too easy over the past 4 to 5 years. And we're seeing people with credit scores below 600. They're putting absolutely no money down. They're walking away from the closing table with a check in their hands. And the reality of it is because these people have absolutely no money to their name. That's great that they're going to be probably a first-time homeowner, and they should be super excited about that. But inevitably, they're kind of being set up for failure because one hiccup, if the water heater goes, if the AC goes, if there is a major bill, these people unfortunately don't have the cash to make those repairs, and they're going to be in a very tight spot. So by tightening up the mortgage criteria, you're going to have a much more quality buyer on your hands, and fortunately, they're going to be in a much better position financially to actually own the house and not living incredibly paycheck to paycheck like so many people are nowadays. Prediction number 2 I have is that inventory is going to tighten up even greater than it already has. I feel that people are not going to be selling their houses as quickly as they were previously because they're going to be a little bit more questionable in terms of not knowing exactly what's going to go on with their employment status. They're not going to necessarily want to have the extra expenses when it comes to moving, buying new furniture, increased costs when it comes to purchasing a home and stuff like that. So I think that inventory is going to tighten up even greater, as I mentioned, because people are going to be a little more hesitant when it comes to actually purchasing a new home. I see the housing market in terms of the $300,000 and under property prices really remaining stable because you do have a lot of investors who can purchase those homes and rent them out for a good return on investment. I think that the $300,000 and up range, especially the properties that are going to require jumbo mortgages, is going to slow down because a lot of those people are the ones who use their 401ks and retirement plans for the down payment on the houses. And as you might have heard, the stock market just took a pretty bad beating over the past month and a half. And so I think that they're going to really be reluctant on diving into their 401k based on how much money they just recently lost. And finally, if you do own rental properties and you're looking for the cash flow, the rental market is going to remain strong here. It's going to obviously have a little bit of an issue in the short term due to people not being able to afford rent necessarily, but in the long term, rental demand is going to remain strong. People still need a place to live. If they unfortunately go into foreclosure or they think about selling their home, they're going to just switch to tenants, much like they did in 2010 and 2011 and stuff like that. So the reality of it is people who are currently renting those expensive apartments downtown Orlando and pretty much downtown in any city, rather than spending $1,500, $1,800, or maybe even $2,000 a month on those places, they're going to switch to single family homes or lower price, obviously, rental homes that they can afford. I think that the rental market is going to remain strong for the single family home investor because the first people that move out of the places they're currently renting are going to be those who are renting the premium, luxury style apartments. So that's going to give a great opportunity to investors looking to still purchase single family homes, not only for a secure place to park their cash, but secondly, prices are still going to climb a little bit. It might not be the 10% like we're used to, but if they're still climbing at a 2, 3, 4% annually, then that's still a pretty good rate of return, especially if you're getting another 8, 10% ROI on your rental income itself. So those are my 4 predictions as what's going to happen, hopefully, maybe in the housing market, but who knows? We'll see what happens in the near future.